Let's pretend that you need $250,000 to fund a business. What's the best way to fund it? Funding a business is actually really simple. For whatever reason, most people trying to figure out how to fund a business wind up being confused and overwhelmed, but it doesn't have to be. There are 4 main methods of funding a business, and so here's my promise to you. By the end of this video, you will have a clarity on the exact funding method that's perfect for you and know exactly how to secure enough funding for your business. Plus, I'll provide you with specific examples from each method we've used with our clients to secure funding for their franchises and business purchases. But look, this whole buy a business with no money is the phrase that everyone and their mom keeps shouting across the internet. But imagine this for a second. When I was selling one of my franchise stores, I had it listed for $300,000. The business was paid off, I owed nothing on it. Now imagine that I get a call from someone saying, hey, you know that business that you're selling for $300,000? How about I just pay you like $4,000 a month for the next 10 years and you have to worry every month about me actually sending you your payment. Look, most business owners will laugh in your face and this will be their response.
How about no?
So let's talk about how you can actually get the money for a business.
Show me the money!
And yes, we'll talk about seller financing too, but we'll also dive into all the other ways that you can fund it. Now, this works for a business that you want to buy. This works for a franchise that you want to start from scratch. This also works if you want to buy an existing franchise. And look, this works too if you just want to start your own thing. Since I'm knee deep in the franchise world, I'm going to run you through how to do this using a franchise resale as an example, as well as opening a new franchise from scratch. Now, if you need help getting funding or just want to know who are the trusted funding companies out there, then go to franchiseempire.com/funding and we can help point you in the right direction to some trusted resources. Okay, so generally there are 4 main ways to fund a business, and keep in mind that you may need to combine some of the methods to get all the capital that you need. So as we're going through these, I will give you a couple of examples on how you can do that. Sounds good? All right, let's do it. Okay, so number 1 is cash, number 2 is the bank, number 3 is seller financing, and number 4 is raising money. All right, so let's start with raising money. A common question I get is, Tariq, how do I actually get the money to fund a business? Now, this method of funding is a way to use other people's money, and then we'll talk about how to use your own money. So yes, of course, raising money, you can borrow money from friends or family. That's the obvious way to go. The way you do that is with promissory notes, actual loan documents to legitimize the process. This way, it's not just an IOU, which is unlikely to give confidence for someone to just hand you like $50,000 or $250,000. But here's a way to raise money that most people have no clue even exists, and this is going to blow your mind. It's using other people's retirement accounts. Now, this is not to be confused with Rob's funding, which is something different, using your retirement accounts to fund, but we'll talk about that later in the video. So using a self-directed IRA is actually using other people's money, because maybe you don't have money. And even if you do, maybe you still want to raise the money. Maybe you have people that want to invest in your business venture with you. And I guarantee you right now, you know someone who has an IRA or old 401k with money sitting in it waiting to invest. So what? How does that benefit you in getting funding? Here's how. That person can do what's called a self-directed IRA. This is where they were able to lend you money out of their retirement account as an alternative investment without technically taking money out of the IRA, which means that they aren't paying taxes on it. Now, this can be as a loan where you make payments back to them, or it can be for equity in the company. So back in my corporate life, I oversaw a division in a trust company where that was all we did was self-directed IRAs. And so private equity companies would get millions of dollars in investments from people using their IRAs to make those investments. And people who didn't want to put their money in the stock market would buy physical real estate through their IRA. And right now, with real estate at an all-time high, the stock market being insanely volatile, people are looking for alternative investments that can get them the return that they're looking for. And so loaning you the money or securing equity in your business could be exactly what they're looking for, and it could be a huge win-win. So as an example, we have clients right now that are looking at an existing franchise resale that's doing over $2 million in sales. The business is priced at about $500,000. Well, right now with an SBA loan, which we'll talk about later in the video, you'll probably be paying around 11% interest rate. At 11% on a $500,000 loan for a 10-year term, you'd pay about $6,887 a month, and over the life of the loan, about $326,000 in interest. So if you know someone with an IRA and can agree on a loan from their IRA at even a 9% interest rate, then on that same loan, you'd save $500 a month on the payment and over $60,000 in interest over the life of the loan. Now, for someone who doesn't want to be in the market, having a steady 9% return for the next 10 years could make this deal a huge win-win. But this is a little known funding method that most people simply don't know about. Now let's jump into the back of the list, starting back at number 1. So cash is the simplest place to start, and it's obviously the easiest and fastest way to fund your business. But here's the real question: should you? Now, I would argue, and most business people would argue, that some amount of your cash and money will always need to be used to get your business up and running. The question really is, how much? Just like most house purchases have a down payment, most people buying a business and starting a business have to make what's called an equity injection. An equity injection is the amount of money that you'll need to put down on a deal. So we'll talk about that more in detail as we dive into some of the funding methods that require that, like an SBA loan as an example. Now, even if you have all of the cash to fully fund your business, borrowing money gives you more flexibility and ensures that you have extra capital. It allows you to have peace of mind because you have money in the bank. And if you were able to pay for it in the beginning, then you can always just pay off the loan early. Pro tip is just make sure there are no prepayment penalties. Now, under the cash bucket, I'm gonna put the ROBS funding strategy. Now, ROB stands for Rollover for Business Startups, and it's a way that you can use your 401k or IRA to fund your business without triggering any tax consequences. Now, a self-directed IRA is using someone else's money, and ROBS is using your own money. So here's how it works. Basically, your retirement account gets put in a special type of account that allows you to use it to fund a business. And this can only work if the money is with a previous employer's 401k or an IRA account. It will not work for money in a current employer 401k because that can't be moved. The caveat to that is unless you're 59 and a half already, then you can do something that's called an in-service rollover, but you have to check with your 401k plan provider to make sure they can even do something like that. There aren't a lot of companies out there that actually do ROBS, but there are some reputable ones. And because of the fees involved in setting up a ROBS plan, it probably only makes sense if you have at least $70,000 in your retirement account. Now, I dropped a link down below to one of the companies that our clients have used for ROBS. So if that's something that you're interested in and want to get in contact with them, feel free to visit that link down below. All right, the second main method of getting funding is the bank. So let's hop into all the different options that you have when getting funding from banks. So let's start with how I got over $300,000 for my first franchise. We did a HELOC, and this stands for a home equity line of credit. This is basically like a credit card on your house, using the equity that you built up. The cool thing about a HELOC is it's similar to a credit card. You only make payments and pay interest on the amount you use. Here's an example. So when my wife and I got our $310,000 home equity line of credit when we were opening up our first franchise business, it took us over a year before we even started construction because the shopping center hadn't even been built yet. So what happened was we only owed $25,000 on the home equity line of credit because we had just paid our initial franchise fee. So for a long time, we were only making payments on $25,000, not the full $310,000. So getting a HELOC is basically business shopping with a blank check. We had a couple that we were helping to find a franchise. They were looking at some resales and some new franchises, but we had them secure their HELOC early on in the process. So they got approved and everything before they even found the business that they wanted to buy. And so what this allowed them to do is once they did find the right business, all they had to do was pull out their checkbook. They never had to really worry about funding ever again. Now look, this video is meant to be high level. So I can make a whole dedicated video on HELOCs and how they all work, but we have a lot more to cover on other funding strategies. So if you want to see a deep dive on HELOCs, then let me know in the comments below. So continuing with getting money from the bank is a business credit card. So early on when I opened our business account, I also applied for a business credit card. I got approved for a $30,000 credit limit on the business credit card, and it proved to be needed. At one point, we actually ran out of money on our HELOC, and the business credit card was able to be enough to fund some of our last minute purchases that were pretty big. The cool thing is that over time and a good history of paying it off, you can continue to just get your credit card limit increased, just like you can with a personal credit card. And here's a cool hack that I did. We owned multiple franchises, so I had a separate entity, bank account, and business credit card for each one. When I sold the businesses, the bank let me roll over my credit limits from the other businesses into my current business credit card. So instead of having 3 different credit cards under 3 different entities that had a combined credit limit of $100,000, now I have one credit card with my current business with a $100,000 credit limit. Pretty cool, right? The next option is an SBA loan, which is probably one of the most popular options, at least in the business buying and franchise space. So most of our clients who buy franchises with us get an SBA loan for at least a portion of their startup costs. Now, the SBA stands for the Small Business Administration, and check this out, in 2022, they approved over $43 billion in small business capital. Yes, that's $43 billion with a B, so I hope you're paying attention. This part's important. SBA loans are given through banks. Now, it's the bank who actually lends you the money, not the SBA, and a portion of the loan is guaranteed by the SBA, meaning if 70% of the loan is guaranteed by the SBA and you default on a $100,000 loan, then the SBA would give the bank back $70,000. Does that make sense? Now remember, when we talked about equity injections earlier on, SBA loans require an equity injection. So for a new startup for a franchise, as an example, the lender will typically require 20% down. For a resale or business acquisition, whether franchise or not, a lot of lenders will only require about 10% down. So what some people do is they'll get a HELOC and use that to come up with the 10 or 20% down payment. And really, you can use almost any money that you can access to use as the 10 or 20% down. A lot of people actually use the ROBS plan as well to get the 10 or 20% down for their SBA loans. You'll just need to show proof to the lender that you've made an equity injection. So make sure you keep your receipts. All right, so next up is an unsecured loan. Now, an unsecured loan is pretty simple. It's just a loan that has no collateral. And that's why credit card interest rates are so high, because there's no collateral if you don't pay the money back. So for an unsecured loan from a bank, it will typically have a higher interest rate than an SBA loan, and you'll need a really strong income and credit score to get approved to show that you can pay it back. What's cool about this though, we actually had a client who got an unsecured loan for over $200,000. So even though it's an unsecured loan, if your income is strong and your credit is strong, you can still get a pretty large size loan. So the next one is interesting and not very well known, but helpful if you have some assets already. It's getting a loan on your investment portfolio. Now, this is not to be confused with taking a loan on your 401k, which can be dangerous. Ask me why in the comments and I'll let you know. If you have an investment account that is not in an IRA or a 401k, just a regular taxable investment account, then you can take out a loan against it while it stays invested. Now, not every investment company offers this, and companies like Charles Schwab, Morgan Stanley, and Merrill Lynch do. But you will need to check with your brokerage company to see if it's something that they even offer. Now, basically, your investment company will lend you around 70% of the value of your investment account. So if you have $100,000 in stocks and mutual funds, they would lend you $70,000 off of that. We actually had 2 clients use this strategy. One guy, David, used it to buy 2 locations of existing businesses, and then he negotiated seller financing for the rest. Then another one of our clients used it to fund starting up her franchise business from scratch. Now, these type of investment loans are processed really fast, so you can be fully funded in less than 2 weeks. And the cool thing about it is you're not touching your investments. And so it still allows them more time to grow. And at that point, your investments become the collateral for the loan. So you can't just take the money out of the account, or at least not until you pay down the loan. These loans are typically a line of credit. And similar to a HELOC, it can just be there waiting for you until you're ready to use it, and you don't pay any interest or make any payments until you actually use it. Now, to wrap up the bank section of funding, you can also do things like cash out refinance on your house, but with interest rates being so high right now, that would probably be more of a last resort kind of thing. Now, last but not least is seller financing. Look, this is obviously only applicable if you're buying an existing business, including an existing franchise. And although it's highly unlikely that you'll get 100% seller financing, it is common to negotiate at least some percentage of seller financing with a business acquisition. Now, what I typically see in franchise resales is a seller willing to finance no more than about 20% of their purchase price, which can be really helpful because now with SBA loans, if you can get that 10 or 20% in seller financing, then the SBA could lend you the rest, and you are, then buying a business with no money down. Now, you would need to draw up a promissory note and hash out all the details, but it's a useful way to put all the pieces together when funding a business. So I did a video with my buddy Glenn here, who is an expert in SBA loans. Some would actually call him the king of SBA loans. And we broke down how SBA loans work and how you can get approved for one. So if you want to go down the SBA rabbit hole and learn how to get an SBA loan, then click here, and I'll see you on the next one.